Welcome back, guys. Hope you had a great weekend. We have finished up today on strong price action. It was actually a bit surprising given what bonds and rates have been doing, but we'll get into that in a bit. If you've been watching the channel, you know I came into this week 40% net short. Actually managed to finish the day up a little bit, but stay right to the end. I'll give you how I'm positioned going forward into the CPI tomorrow. There's a few interesting things going on out there. So you can see here on the SPY, we've gapped up today, held, looks like it was going to roll over in the afternoon, but then went up and finished at the highs. Same with the NASDAQ, pretty strong price action here. Gap up and held and finished near the highs. Let's go over to the daily chart. You can see it was pretty good across the board. All the indices up, mid caps, small caps. Internationals were up, Japan was flat. And if we just go through internationals, we can see Canada 1, United Kingdom 2, Australia 3, Europe 4, Japan 5, 6. So 5 out of the 6 international indices that we follow, the big ones, are all trading above their 50 bar VWAP. So that's an uptrend. We did have volatility off today. It started higher and then just sold off and finished right at the low, mimicking price action and SPY. So that's interesting going into CPI tomorrow, where volatility's ended. We're still just a touch above 20, but the market's basically saying all good. Market's expecting a good CPI. We're going to get into that in a bit later, so stay tuned in and we'll go through the inflation charts and what the market's expecting. Let's keep going through insurance put call ratio. Not many people buying puts this last week and a half, and we're still below 1 here today. So market's really not hedged for anything to go wrong. Not many people have got insurance on, so if we do come in higher than expected on CPI, this thing is going to come off hard. We've had growth, cyclical, high beta sectors hold up today, but still looks like we've just come through the trend line a bit and holding underneath it here. So this still could be rolling over the way it looks now. We've had rates creep higher again today. If you look at, this is September Fed funds futures rate, they're implying that the interest rate, Fed funds rate in September is going to be 5.18%. That's an all-time high. Same with December, now implied at 4.98. So this is where the market's getting a bit tricky. We've got really strong price action in growth assets. If you look at NASDAQ here, the question is this gap up here last Thursday, is that a big, thrust, high volume start of a move, and this is a pullback that's going to continue on? Or is this an island reversal blow off and, the rates is going to win? Or what I'm starting to think now is that maybe the market, the price action and growth assets is pricing in that the economy is going to do better than expected. Maybe we don't get a recession this year, maybe it's not till next year, and that the growth in the economy, that will outweigh higher rates. So that's the price action is starting to look a little bit like that, because we've clearly got rates rallying here. September Fed funds at the highest rate. Normally that would be bad for the stock market, but the stock market's kind of shrugging it off. So tomorrow's CBI is going to be a real big one, especially with how the market reacts to whatever number we get, and has made things a bit tricky for us traders. So with that, we've had treasuries just bump up a little bit, high yields just holding there, but still under its 50 bar, which is indicating a risk off sentiment. Dollar's holding flat. Bitcoin was off just a little bit. Commodity complex was overall down today a bit. Dr. Copper seems to be trading in its own, completely different from other commodities. It's below its 50 bar VWAP, but it's just holding here. We did have natty gas off a bit today. We've still got this long play on. We've got our stop down here, so we're just waiting for a little bounce up and pop off. It does look like momentum stalled out, getting heaps of volume in here, so it's got the right setup for a bounce, and we're going for a 2 risk reward ratio on this trade. Over to ARC, you can see we've held here, and this is the question: is this here an island reversal, or is it the start of a new trend? Is that a gap up, big volume thrust move, and this is actually a pullback before we go higher? If we look on the 3-day chart, we can still see it has put in a base and it's come off a lot. Obviously and with momentum has stalled out. So is this the bottom back here in December for ARK and other high growth, high beta sectors and stocks? That's what we've got to figure out. Airlines holding up. Defensive was up today. We're bullish on the defensive stocks, short term and long term. If you look at this, almost breaking out to new highs, and with all the geopolitical tensions out there, it's a good hedge to have in a long portfolio. That's why we've got it. Continuing on, home builders. This is the real surprising one for me, and this is why we always got to remember our number one principle in trading: prices lead, fundamentals follow. Because it's easy to get blinded by fundamentals and the news and headlines, but this is a tricky one. So if you look at the price action, it's clearly going up in home builders. But if we just look at some economic indicators, for example, if we look at United States new home sales, that has clearly rolled over, and has, obviously we hit the peak back here in September 20 during COVID lockdown, but this looks like to be in a bad trend to me. And if we also seem to be roaring, and this is a monthly chart of the home builders ETF, is this an inverted hammer and we're about to return back here? I mean, this could be, if we look at a Fibonacci from this move here, between 50% and the 62% reversal. So this could be a pullback in home builders. I'd be surprised. I can understand if the other sectors continue higher, but for home builders to break out here would surprise me, and I'd be more inclined to get short up towards the top of our buy-sell band. I think that would represent a good risk-reward opportunity for a short home builder position, just given the economic backdrop in the housing market and the disconnect here. So that's interesting. Look at financials. They're holding strong, seem to be consolidating. Similar to industrials. It's got a consolidation pattern here, just holding up the top. And look at this 2-week chart. That looks like a springboard ready to go higher. Industrials, Dow Jones Industrials, are they going to break out this year to new highs? I think that would be a bit of a pain trade for a lot of people. That's kind of unexpected with all the recession talk. Moving on further. So tech had a great day today, as did consumer discretionary. Also had retail. Retail bounced out pretty good. And that price action too is looking like a pullback in a new bullish trend. Semis held. Just holding the trend line here on semis. And healthcare is just trading flat. So staples just coming up to its 50 bar there, and utilities flat. So that's more looking like we've clearly got no rotation in defensive sectors. So it's still growth seems to be leading the way here. BlackRock Barometer came back today, and we're up. Apple, good price action, holding strong, defending this gap level. And Microsoft is strong as always. I remember it was only a couple of weeks ago. I remember we gapped down here after CEO Microsoft gave a bleak outlook, and market just shrugged it off straight away and hasn't looked back. And it's just such strong price action in Microsoft. I think with their investment in OpenAI, because look at what Microsoft's done the last 2 weeks. Now look at Google. Blonk. That's big institutional money getting out of Google here. Look at that volume, 119 million shares, down 4.3% on Google. Well, Microsoft is holding its high. So that's the bit of a rotation, I think, people betting on Bing versus Google, which I'm going to dive more into later this week when I do a deep dive on Google. So hit subscribe and come back for that one. That one's going to be a good one. Meta's had a little bump up. Same with the semis. I can easily see Nvidia holding here and just ripping new highs. Semis, I mean, this has been walking the line, and if you watch my channel, you know with our buy-sell bands, a lot of time they'll come up, touch tag, and come back, or they'll walk the line, which is indicating a strong parabolic trend. So I'm not willing to call that this is rolled over yet. We'd have to see, you know, we take out 205 and definitely 200, close below those levels. Otherwise, this could easily just continue on its move upwards. Tesla, we did a deep dive on Tesla yesterday on the channel. Thanks for all of you that watched it and commented and liked, and apologies for the audio. I'm not sure what happened there, but we didn't seem to have great audio on that video. So today, price action, price gap down, and let's go down to a 15-minute chart so we can see what happened. Price has gapped down, sold off, but then it's been quickly bought back. So it looks like there's still quite a few bids in the market, but considering what else happened in the market today, it's Tesla's, you know, does its own thing. Sure, the market influences it, but all the time we can see Tesla up big and the market's down, and vice versa. Like today, we are expecting this 182 level to hold. If that doesn't, then we're looking for 166, and I'm really looking for 155 to hold. If we do get down there, I'd be surprised if we fill this earnings gap. So I think we've got a new kind of theme and story from this earnings gap. So I expect the low of that to be tested, barring any market crash. So check out the Tesla video if you didn't yesterday for what price target we've got on that. Over to meme stocks is a bit mixed today. Did have Bed Bath & Beyond down 13%. All these things look to have rolled over meme stocks. Okay, so what are we thinking? Final diagnosis and where I'm positioned. This is going to be interesting. But before we get into that, I just wanted to show you, we talk about inflation. Okay, so we're expected to come in tomorrow at 6.2%. January 6.5 expected, and it came in at 6.5. And you can see what's helped the market a lot is previously in December we came in below consensus 7.1, came in below consensus 7.7. But now we've come in line with consensus. So you can see just over the last year, a lot of the time actual inflation can come in higher than what we expect. So just looking at the bond market's saying, to me at least, CPI could be higher. The rates, you know, it wasn't that long ago that was saying, no, we need a pivot, economy's getting softer. Look at this, what happens just in a week and a half. We're now sitting at all-time highs. The bond market may even, it was behind the Fed, it may even start to get ahead of the Fed. If we start breaking out 5.25 September, especially if December gets up above 5 as well, so that could be saying rates are going higher. The job market is strong. Remember last Thursday we got 500,000 new jobs. The Thursday before that, 500,000 new jobs versus 188,000 expected. So there's every reason for inflation to be there, and we have seen it, you know, come in above before. Might be time to come in above again. And if that happens, it will be interesting. One could expect for the market to sell off because there isn't a lot of people with insurance, as indicated by the put call ratios, traded, you know, even low as 0.7, 0.8, and hasn't really got high. So there's not everyone has insurance out there. And looking at the price action in the market, it could be the reason for us to have that 2-3% down day that we haven't had all year, that big down day we haven't had all year. That could be a good reason for that. And this could turn into a kind of a weak retest coming up here. So that's the big one. And we'll just go back and put it in context. Here's inflation going back to 2018. You can see we've gone up to 9.1. For sure it's rolling over, but is this going to be a straight linear line down? I don't think so. Like, we're always going to, you know, markets go in waves. Don't just take one step down every month and one step up every month. They wave. So we could get a wave up here, and that'll be interesting to see how the market reacts. Market could, if that were to happen tomorrow, we're expected at 6.2. If we come in at 6.3, 6.4, 6.5, maybe the market will gap down big time, bear trap, and then rally and hold with all this strong price action. And then we know for sure that the market is loving the growth more than it's worried about higher rates. Okay, so that'll be really interesting to come out with tomorrow. Another thing to pay attention to is we do have bearish seasonality coming through at the stock market. Typically the second half of February is a bearish time, and you can see on our seasonality forecast indicator, VIX volatility is expected to go up 6% the next week, and markets expected to come off a little bit. But it is tricky. It is tricky for me as a trader with this price action that's going on and with what's happening in rates. So if you're watching the video, I came in the week 40% net short. I actually flattened out today, and not market neutral, equal long shorts, actually just gone completely to cash. So it's just one of those times where I just don't know I really don't know what's going to happen. I don't think I've got any edge going into tomorrow. It's pretty much a binary gamble. So sometimes you just got to sit out of the market, and it took me a long time to learn that. Don't have to always make a call. Don't always have to have a position on. It can just be in cash and wait. And what I'm going to be waiting for is A, what the CPI comes in, and more importantly, B, how the market reacts after that first initial reaction, because we could get a fake out move from it. And then I'll start putting on positions again soon, depending on the price action and what happens. So for now, I can honestly say I don't know. If I were to make a call, I would just side with the bond market and say that maybe CPI does come in at 6.3, 6.4, a bit higher than we're expecting. So if I were to choose a side, I'm erring on the side of caution, saying we're going to come in a little bit higher, and that should have stocks come off, but I don't know whether they're going to hold and rally, because maybe we're just pricing in much better than expected growth and economic conditions ahead. Okay, thanks for tuning in. I really appreciate you guys liking and subscribing. We'll be back tomorrow. I'm going to be back a little bit later tomorrow. I've got a big family birthday party I've got to attend to, but after that I'll get you guys the video with what's happened in the CPI, and more importantly, we'll go over the price action, and I'll tell you how I'm positioned going forward out of tomorrow's data. Okay, stay safe out there. Thank you.